Hi folks, Dan Bird here with the daily scan. Let's see, I think I changed this. Oh, maybe I didn't. Okay, anyway, it's not the midday, it's the actual end of day market update. So let's take a look. It's going to be quick tonight because I've got some places to be. So let's take a look real quick at the home page. And you can see the market bias is ticking down slightly. So the whole market moved down today on options expiration, but it stayed right in that expected move range. So that's pretty amazing. So right in the middle of the expected move right there for the S&P, although down, you can see it over here on the zoomed in part on the right hand side. So it was down for the day as we kind of expected it would on options expiration. NASDAQ, same thing. NASDAQ is also down for the day. It actually made it a little bit above the expected move, but came right back down inside of it. Amazing how that works. And then Russell 2000 expected move there. We are right in the middle again. So actually was above it, opened above it, but closed right in the center of the expected move. The expected move, by the way, is something that the options market prices in. That's how options get priced. So it should not be surprising that it ends within that range, because that's where a lot of options will expire worthless. When you buy an option, you expect it to move beyond the expected move. You want it to move much further, either up if you have calls or down if you have puts. But the market makers, of course, would like for it to end right in the middle of that range so they don't have to pay out the premium. So if you've ever bought calls and you saw your stock move up, but then you still ended up losing money, that's why, because they're priced based on the expected move. And as you'll see, when I recreate this for next month, it's going to be a very wide expected move for the July 18th date. So let's take a look at the dates here real quick. Here's where we are right now for June. We are right here. This is Monday. You can see next week, Monday might be a down day. Monday, often after options expiration, is a down day. But right after that is where the market starts to go into that 3-week rally into the middle of July. So prepare for Monday maybe to be a selling day, and then perhaps we start into a rally after that. This is Christmas in July. This, again, is from Stock Traders Almanac. They do a really great job of historical data. And you can see here in July, right here, the last week of June, which will start on Tuesday. Oops, right there. And goes right into July 15th. And then it pulls back and just kind of goes sideways until we get to October. And then the market takes off again. So this is from 1985, the NASDAQ 12-day mid-year rally. Since 1985, that's what the market has typically done. Does not mean it has to do that. It can also always have an outlier year. But historically, on average, this is what it looks like. So next week until July 15th. And then here's what July looks like. Interestingly enough, July 15th is right here, the same day as the CPI report. CPI report may come in tame again, even though the base effect is showing that it should tick up slightly. But if it comes in tame, the market's going to like that, and might even continue past the 15th. So here's the 15th right here. And this is the historical view. It really just flattens out once we get around the 18th, flattens out for the rest of the month. Options expire on the 18th, and then the Fed meeting is on July 30th. And there are some Fed folks already talking about potentially a cut at that meeting. There's no meeting in August. So if they don't cut in July, then the next meeting is until September. But they're starting to talk about a cut right there in July. So we may actually have a pretty bullish summer if that happens. Today wasn't actually too bad, even though it was down at the end of the day. Wasn't really too bad overall. Let's go back over here. And I want to show you the market bias. You see went down slightly. We look at that over here. We've got discretionary was down, healthcare, gave a down signal. Utilities were up. Over here, we've got a long-term up signal on clean energy. This one right here is the large cap growth versus value actually was down. I know it's hard to read here, but you can always download the matrix with this button and actually see the actual spreadsheet with all of these things actually have links in them, so you can link to the charts. So if we want to link to the discretionary chart right here, which turned bearish today, short term, it's right there. That's the short-term bearish signal. So that's moving down. Let's go back and take a look at on the home page, because I've updated these tonight. I will be updating on a lot of the longer term ones later, either tonight or tomorrow morning. But if we look at the new Dow Theory, so this is, you can read about it here. This is the industrials versus transportation. This was something created by Charles Dow way back in 1900, so 125 years ago. What he said was, if the industrials, the people that make the products, are moving up, then the transportation should, the people that ship the products, should also be moving up. And if one of those is different, then the market is not confirming. And that's what happened back here in February. In February, the industrials were basically going slightly up or sideways, and the transportation were going down. It was signaling that the market was ready to go down, which it did right here in February. Well, right now they look pretty similar. They're pretty much right at the same place. They have the same looking candle. So they look like they are confirming each other. Doesn't mean it's going to go up or down. It just means that there's confirmation. There's not anything telling us that there is a divergence. So now let's look at something that's more updated. We'll look at the equal weighted NASDAQ versus the equal weighted Dow. So NASDAQ over here, Dow over here. And again, back in February, the equal weighted NASDAQ was going up while the equal weighted Dow was going down, signaling that the market was ready to roll over, which it did in February. But right now they look pretty much the same. Everything about them looks the same. So they are moving in unison with each other. If we look at the NASDAQ versus semiconductors, semiconductors should lead the NASDAQ, and they actually are just barely. If you look at it over here, you can kind of see that the semiconductors are moving a little bit higher or even, whereas the NASDAQ 100 is moving a little bit down. So semiconductors actually are leading right now, which implies that the NASDAQ might turn around and start to head back higher. And then if we look at communication services and the internet group, that's the one that didn't do quite as well today. In this case, internet is down more than what the communication services looks like. It's got a much more solid candle for the day. So, but they're still pretty much roughly in the same place. So there's not really too much that the market's telling us right now. I think it's just basically treading water. On what should have been a much more down week, it really wasn't. So Max Payne did not really show up this month. Monday might still be a negative day, but I think then we go into a bullish period until at least the middle of July. And then we'll see what happens with the Fed meeting at the end of July. So that's what really could turn things around and hopefully have things starting to move higher. If we go back here and take a look at I want to look at the VIX real quick. The VIX is down here. So you see the VIX was down below 17 back here last week, and then it pulled back up and actually was a little bit higher today, but not by very much, even as the S&P got a red bar. But look at the 10-day put call ratio. So this is moving up, which means there are a lot more puts being bought than calls. So more people are becoming more negative. Right now, that it is not good for the market, but when it gets elevated, when it gets way up here, that's when the markets turn. That's when bottoms usually happen. But this is starting to spike up quite a bit, even though the 10-year right now is actually moving down. So the 10-year is pretty much stable, hasn't been doing too much. All right, let's go back and take a look at a couple of other things over here. Put call ratio, 5-day moving average that we just talked about. You can see right here, it's just spiked. It's spiked all the way up here. So it's very close now to getting into that bottoming area, which is really interesting because the market really hasn't bottomed, hasn't really gone down that much. So with puts really spiking like this, and of course this is options expiration day, so you're going to get all kinds of volatility on a day like today anyway. But if it spikes way up here, that means everyone's in puts, everyone is bearish, and that's the time when the markets turn and start to turn bullish. So keep that in mind. If we look at the risk on, risk off chart, and junk bonds versus 20-year still moving down. Junk bonds versus high yield corporates is going sideways here. The Russell, the growth versus value just started to go down. I showed this at lunchtime earlier today, but nothing that's overly concerning yet. I think next week is probably going to be a fairly calm week with a down day probably on Monday. If we look again at the 10-minute charts that I showed at lunchtime, see how they ended the day. You can see they continue to go down. So here, 11:30, we were right here. Last time it continued to go down with a little spike at the end. That doesn't necessarily mean anything. That happens every day, 10 minutes before the close. So that spike doesn't really mean anything. Technology is flat, financials flat, discretionary flat, communication services is down. I'll show you that on the other chart. Industrials is up slightly. And then for defensive, healthcare actually is flat. Staples, even though it moved up, it's sort of flattened out. Energy is showing a little signs of life. Utilities pull back some. So the defensive, it doesn't really look like there's a big rotation out of aggressive. Just looks like a normal Friday options expiration day to me. Here's the internet versus XLC. I showed this on the other chart before, but this is on a daily basis, definitely going down. Semis recovered and then flattened out. Technology is flat. Discretionary versus staples, and growth versus value pulled back in the beginning of the day, and I showed this, started to move back up and then just basically stayed where it was. So again, this isn't really showing me that there's a big, huge concern right now. I think next week is probably going to be fairly calm, other than Monday might have a down day. All right, let's take a look at, real quick, look at this one momentum scan and see what might have changed. Got 35 stocks, Apple's on it, Abercrombie, Anheuser, Carvana. Let's see, up here's Gorilla Technology, had a nice day today. Kinder Morgan, Pipelines, Lemonade. Let's see if there's Sprouts. Sprouts looked good earlier in the day. It still looks good now. So Sprouts now is above the 21-day right here. Had a huge volume day today. So that is confirming that this uptrend may continue. See, momentum is just starting to cross over. It's right in the middle of its channel. So it could move all the way up here to 180. So Sprouts, I think, still looks pretty good at the end of the day today. Toll Brothers, Walmart's moving up. Walmart actually has a pretty nice, it's not quite above the 21 right here, but all of the momentum indicators are starting to move higher. So we'll watch that. Looks like that one will probably continue up next week. Zeta Global. Looked like it was going to have a nice day, but ended with a shooting star. So that's not a good sign. Typically that is a reversal, so it may not hold that rally. We'll see what happens next week. All right. Let's see. There was a couple Circle, CRCL. Somebody said Circle, which is a new IPO, and it's just gone screaming higher. So it started down here, IPO'd at 68. Now it's at 240. So basically a four bagger in what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. 4 times, goes up 4 times in just 11 days. That's pretty darn good. There was one other one, which I can't remember which stock it was, but if there's anything you would like for me to look at, put it in the chat. Let me see if it's over here. Oscar, that's right, Oscar. So let's look at Oscar. I actually did take a look at Oscar and went back and looked back at the scans, and it did hit the scan right back here on the 16th, and you can see what it's done since then. Just 3 days, it's had a huge move. So right here it was about $15 and went up to about 21. So that's a nice move higher. It ended today though in a spinning top. So likely that means indecision. That likely means the run might need a break. It probably have some profit taking right in here. We'll see if it closes this gap right here. But and you have to wait for the candle for the next day for confirmation to see what it's going to do. So we'll see what happens with that one. All right, I'm going to update everything else over the weekend. Actually, I'm looking at this. I'm going to show you this. Here's the XLC versus the internet. You can see how much down that one is. You can see the internet stocks actually had a worse day below the 21 than the communication services sector did itself. So that implies that there probably will be more set downside in that particular sector. And that actually is where Google, let's see what Google's doing. Google, big down today. So that's what did it right there. Google was the main driver on that one. And Netflix is in that group as well. Netflix looks okay. So Google was the culprit that really pushed that one lower. Big, huge down day today on Google, down almost 4%. All right, that's all I got time for tonight. Sorry. Please let me know if, please like and subscribe, and let me know if there's anything you'd like for me to look at. I will be updating everything on the website tomorrow morning. So there'll be a new list of, let me bring this back in so it's easier to read. Be a new list of top 10 stocks up here. And right here, relative outperformers, stocks that have beat earnings and revenue, and the IBD 50. These will all be updated tomorrow morning. And as well as the top industry groups will also be updated tomorrow morning. And I will update all of the other charts on the website by tomorrow morning as well. Just out of curiosity, I want to see what renewable energy looks like. Big drop for renewable energy. Was trying to make a comeback, hit the 200-day right there, and got rejected big time. It's all the way down there again. All right, thanks for watching. Let me know if I can help you with anything. Be happy to do that. And I will have a nice weekend. Talk to you later. Bye.